Hey guys, it's Mario here with Buying South Florida, and welcome to another market update. Today we have Rick Fabricio. He is an incredible account executive with over 25 years of experience. He is on the wholesale mortgage lending side of things, so it's very interesting to get a point of view from his side just to see how the mortgage banking industry is doing, how they're reacting to COVID-19 and so forth. So I'm excited to have him on. Here we go, Rick.
Hey,
Welcome.
Mauro, thanks for the intro.
Yeah, man. No, of course, absolutely. Thank you for being on here with us. So, we've been doing business for a long time, you and you've always been an extremely helpful account executive over at Stearns. So I really appreciate that. And I was really looking forward to getting your point of view on things, right? Just seeing what your take is on the market, where things are going with property values, interest rates, and so forth. So, now that South Florida is opening up again, have you seen an increase in your mortgage applications?
I have seen there's definitely an increase of volume. There's pent up demand, and on both ends, on buyers and definitely on refinances. There's a lot of people that are looking to get these low rates, and there's buyers that got scared. That saw what was happening with COVID, didn't know what was going to happen with property values, and now are rushing out to go take advantage of rates and take advantage of the summer, and buy homes.
Yeah, and actually I've been doing these market updates right since the COVID-19 started, and one of the first things I said immediately right off the bat was, real estate is driven by supply and demand. So if you have an economy or a market down here in South Florida where everyone's holding off on going to see property, everyone's holding off on listing their properties, I said that once the market opens up or begins to open up, you're going to have a flood of buyers in the market, and that essentially is going to drive the price higher, because obviously if you have one property with 30 buyers for that property, is going to create a multiple offers situation and ultimately drive the price up. So what's your take on buyers or clients that are on the fence about buying now, as opposed to waiting a little bit longer till maybe a month or two down the road?
Well, people that are deciding whether to buy now or buy a month or two down the road, I would suggest you buy now, because there's that factor, and then there's a second factor. The people that right before COVID hit might have been in a financial situation where they needed to sell right now, hold their houses off the market because, one, they might have lost their jobs and now have the benefit of the stimulus plan and might be earning more than they earned with a job. Secondly, they are in forbearance right now. So if they were having a financial situation prior to COVID, they called their bank, they got a forbearance, and now they're not making mortgage payments. They took their house off the market. So the supply went down artificially, and supply went down because people took their houses off the market because they don't want to show them. So prices are going to go up even more.
Yeah.
So I would suggest buy your house now, take advantage of the low rates, and get the house now before the houses go up.
Yeah, I couldn't agree more. And I've been saying this from even, a month or 2 months ago. I had the conversation with clients back then where I told them that if if you have job security, for example, if you're in the medical field, if you're in construction, you're not going to stop working, it's a good time to buy. Not only are the rates low, but right now there's not a lot of buyers on the market. So you're able to get that discount on properties, you're able to get the low interest rate. And, going forward, I think, Rick, that just as I predicted, and I want to preface this also by saying that I am an expert per se, or a local expert in South Florida real estate market, right? So I think the market down here in South Florida is different than if we look at Jacksonville, if we look at Orlando, and so forth. So I try to keep all of my data, all of my forecasts, and so forth as local as possible, because our 95% of all of our client base is down here in South Florida. So I think down here in South Florida, the market values for properties overall are going to continue to increase, especially now since we're opening up and people are beginning to see that you can either live with the COVID-19, right? You get used to it. You're going out with your mask, you're going out with your hand sanitizer, and life goes on. Or the people that are scared of the COVID-19, they're seeing that it's, we're making progress with safety measures and so forth, that again, you can reopen the economy, you can get back to work in a safely manner, right? So I completely agree that, it's a good time to buy, especially because of the interest rates and so forth. And I was actually reading an article from the Wall Street Journal that it said that about 91% of economists, right, that were surveyed per se, I think is what, that they thought the economy was already in recovery mode, right? So they think already that it's on the way back. What do you think?
I agree. I mean, the numbers we had on retail sales, the numbers we had on unemployment, all looking positive. So we definitely had a tremendous amount of unemployment initially because everything shut down, everything closed, and there was panic. Everything panicked. The government panicked, the community panicked, the business environment panicked, the mortgage industry panicked, everyone panicked. That took 30 to 60 days to calm down, and I think everything is in a state of recovery. I think it's going to be a while for everything to get back to normal, but I think we're in a situation where those people that are able to buy have the ability to buy. And I think over the long term, this is an opportunity to get incredibly low rates that no one's ever going to see in their lifetimes again. And you're going to have an opportunity to buy a house at a discount, because there's going to be, as things continue to open up, there's going to be an acceleration in mortgage activity. And these people that are refinancing now, they're projecting a couple $1 trillion in refinance activity. They're not going to sell their houses that they're refinancing at interest rates in the 3s. They're not going to sell them in a year, in 2 years, in 3 years. They're going to sit in these houses. So this is going to be something that you're not going to have an opportunity to buy for a significant amount of time if you don't take the opportunity now.
Yeah, and early on when this whole thing started happening, I looked at some of the reactions that lenders, right, like Stearns and other lenders out there, that the reaction that they had to kind of protect themselves against a catastrophic market downturn, right, meltdown per se. So one of the things that I noticed when I look back at 2008 was that there was so much equity in the market, and people started to cash out that equity, and the banks were essentially just lending. If you had a pulse, you essentially could refinance your house out and get all the cash out. And one of the reactions that I saw was now is when the banks anticipated kind of this market downturn, and they increased the interest rates of cash out refinances to the point where it made no sense to do a cash out refinance. So it was kind of like a fail safe, right? If we prevent the consumer from cashing out all of the equity, we're essentially protecting ourselves in case the values do go down. There's no short sales, there's no foreclosures. So looking back, I think it was a good reaction on the cash outs, on preventing all of these equities from being cashed out and so forth. And I think that helped a lot.
Yeah, and that's definitely being on my side of the business. It was the first thing that we saw. As soon as COVID really became an issue, the first thing we saw was an influx of cash out refinances. I'm sure you saw it to some extent on your side, but on my side, every other loan that came in the door was a cash out refinance. Everyone was trying to pull out equity, and there had to be a point where we said, hey, this had to stop, because we didn't know how far COVID would be. At that point, nobody knew. Nobody knew if this was going to be 6 months and the country was going to be shut down for 6 months. Thank God that didn't happen, but we had to make a move.
Yeah, man. And look, Rick, I think that the market itself reacted accordingly, right? I think government stepped in, and having learned from 2008, some of the fail safe that they put in, like for example, a forbearance program, a preventing cash out refinances and so forth. I think overall on the mortgage and real estate side, they reacted well, right? I think the measures that were taken prevented any further panic, prevented any a market downturn that could have happened. And I think, in my opinion, good reaction overall. I think it was good for the market. And now we're seeing that as the country is opening up, as South Florida is opening up again, more people are getting back into the real estate market to purchase, to refinance, right? And there's more investment opportunities now. And one of the things that I've been telling our investors per se is that if you're looking to invest to get into an Airbnb now, it may be the perfect timing for them to buy a property that could be turned into an Airbnb, because as people fear gathering in large numbers, they're going to opt for an Airbnb as opposed to a hotel, for example. So if you look at properties that are able to get near, like for example Disney World, for example near the beach and so forth, we're seeing that more people are opting for an Airbnb as opposed to a hotel. So that's one of the sectors in real estate, right, that I think is a good time or a good opportunity for real estate investors. So what do you think as far as Airbnb properties over hotels and so forth?
I'll tell you from personal experience. I don't know if you know, I have a property in Gatlinburg, Tennessee, which is a very popular tourist area in the Smoky Mountains. Since Gatlinburg opened up, my property has been pretty much full. Person leaving, and the very next day somebody else is going in. It's every day there's somebody there, a family staying there, and instead of staying in a hotel. And I completely agree with what you just said. They prefer to stay there, stay in a home that they know that it's not a building with hundreds of people going in and out. It's a property that it's one family coming in, the house gets cleaned, and then somebody else comes in, and that's it. I completely agree with what you just said.
Yeah, man. And also, I like to look at, like facts, right? Statistics, numbers, and so forth to kind of predict and forecast, right? Or base my opinions on. One of the things that I've been looking at recently is the unemployment rates, right? So the total number of unemployment as of, I think, 2 weeks ago, or as of the end of May, I think was the last report. It's about 44 million in total. Right. So when we look at the aggregate or the total unemployment filings, 44 million it's a scary number. But there's a stat that I think is worth looking at. It's a more real indicator of the unemployment market, and that is that about 20.9 million are actually collecting unemployment, which tells us that the 44 million total unemployment applications is not the actual real number. You have to look at how many people are collecting unemployment, and that tells us how many people are back or are still on unemployment. Right. So when we kind of just look at if the market's coming back, if real estate is coming back, we have to look at unemployment. And it shows me that even though the total number of applications are at 44 million, we gained as a whole about 2.8, 2.9 new jobs or back into the workforce. And that has to do with the government opening up, specifically down here in South Florida. There's jobs that are coming back now, right? So absolutely. More people are back into the workforce. So it only tells me that as unemployment, the total number goes up, the actual collection of unemployment has either plateaued or decreased.
Absolutely. And I mean, you could just tell by the traffic. There are a couple opportunities that I had that I needed to go somewhere during the lockdown. I mean, you could get across town in 10 minutes. I had to go somewhere the other day, and it's almost back to regular traffic. That means people are back to work. People are going out. People are doing things. You're not leaving your house and sitting in palmetto traffic if you don't have work to do. So, if somebody's doing that for fun, let me know who they are. There's something wrong with that. But definitely there's people going back to work, and that's good for everybody. That's good for them. That's good for us as mortgage professionals, because those people are earning an income, and either they're making money for the person that's buying the home, they're buying a product from a person buying the home, or they're the one qualifying for a home. So it's good for everybody. It's good for the economy. It's good for our nation. It's good for everybody.
Yeah. And how long do you think that, South Florida should hold off on reopening completely?
I would tell you that in my personal opinion, I'm glad that they pulled back on phase 3, that I think was scheduled to start today, if I'm not mistaken. That in Dade, and maybe in Miami or Dade County, I think phase 3 was supposed to start today, and they stopped that. They announced it sometime earlier in the week. I probably feel more comfortable going phase 3 in maybe 30 days, depending on how the tests go. I do understand what they're saying about the tests being higher because they're testing more. But I think where we're at right now, we're at a good place where, businesses are open. You're able to go do the things you need to do with certain restrictions. I see most people are wearing their masks. Most people are social distancing. We're aware of what needs to be done. So I think we're at a good place right now to be safe.
Yeah, I think we've played it safe overall, and I think that's good. I hope that at one point we get, herd immunity. I'm sure you heard the term, where everybody essentially just becomes immune to this thing. That's, best case scenario. I agree with you, right? I do think that we've handled it as a whole pretty well. I think opening up too quickly would have been a mistake. I think opening up slowly is the right way to go, just kind of seeing how everyone reacts in terms of, if they do get sick, how sick do they get, and so forth. There's new information coming out almost every day about this. And, I prefer to err on the side of caution rather than, recklessly just opening up and everyone back to business. And then all of a sudden we're hit, we're hit to a point that we can't recover. Right. So I'm really hoping that, with that being said, maybe in 2 to 3 weeks, maybe a month, we are completely, fully operational and ready to go. I'm looking forward to seeing the summer and the spring market for real estate. I want to see what that will look like, with an economy completely open. I think that, we're doing a lot of business now. Imagine if we're open and, we have a vaccine, it's ideal. Everyone can go out there and without any worries, we can go to 150% capacity on our economy. But I'm really hoping that we reopen here in 3 weeks, maybe 4 weeks, months, in a month or so that we can get back to a full summer and spring market in real estate. That'll be good overall.
Yeah, absolutely. That's the idea.
Yeah, man. And actually, I was reading a statistic about how much a real estate sale or transaction actually puts back into the economy. Man, Rick, and it was like $80-something thousand per transaction. When you account for commissions, when you account for salaries paid, right, on your end, you have your underwriters, you have your whole team. On our side, we have title, we have realtors, then you have the buyers. They're going out to remodel their homes. You have the general contractors. There's so many things at play with a sale of a property that, man, it's so important that we get the real estate market back up and running at 100%.
First, I was saying that I did a video when everybody was all worried about what was going to happen. I did a video about calling past clients, and I was saying, it's not just about getting business for yourself. It's about getting business for your realtor. Maybe one of their past clients wants to buy a house, getting business for inspectors that insurance agents, you know, because that one person that tells you that they want to finance a house or buy a house is business for a realtor, business for a title company, business for an inspector, business for an insurance agent. Just that one customer that you reconnect with is a slew of people, contractors, handymen, AC guys, kinds of people that just that one contact that says, yes, I want to buy a house, yes, I want to refinance, that you can connect and put food on all these people's plates.
Yeah, and at that point, you become more than a realtor or a broker or, you know, an account executive. You become a source of referrals for all of your clients, right? You're
Absolutely.
more than an agent. You are out there. You know, if you have your general contractor and you have, you know, your past clients that maybe you're sitting at home with nothing else to do and they want to remodel a bathroom, hey, put them together. Right, get some referrals going for your.
That always comes back to you, like helping, giving a referral out will always, you know, not always from that one person, but that karma. I believe in karma. You give something out, and it's going to come back to you somewhere else.
Yeah, man, and it's about, you know, the team mentality. It's about increasing your value with your clients, because at the end of the day, if your client needs a trusted general contractor and you can provide, you know, a connection. Hey, I may now trust you a little bit more. Now I can, you know, call you for, you know, to list my property. I can call you to refinance. I can call you for whatever, right?
If your customer believes that if they call you and you can give them the answer to just about anything, they're going to call you. Hey, yeah, man. I have a question about title. Hey, I'm going to call Mario. I got a question about real estate. I'm going to call Mario. I'm going to question about more. I got a question. Hey, my faucet's leaky. I don't know a plumber. Let me call Mario.
Yeah.
You know, and
I have, in our line of work, Rick, we meet a lot of people, right? So a lot of my clients eventually become my friends, and they are plumbers, they're general contractors, they are real estate attorneys, immigration attorneys. So I have a good network of trusted, good professionals, man. And, you know, at any point that my clients call me, I know I can point them in the right direction, someone they can trust, and with transparency. And I can tell you, man, that since this whole thing started, I've tried my best to reach out to my past clients just to see how I can help some way, somehow. Right. And again, I'm really hoping that going forward, we reopen. I'm really hoping that, you know, all of my clients that are business owners, most of them, I want to say, if not all of them, have remained in business. And, you know, some of them took advantage of the PPP program, the Payment Protection Program from the government. That helped, even though it's, you know, on paper, it sounded much better than eventually in practice, but at least it was there for some of my clients to use and so forth. So yeah, man, yeah, going forward, I'm really looking forward to a fully reopened 100% capacity real estate market. So, I'm excited about that.
Yeah.
No, and let me tell you that these rates are phenomenal. So my job, obviously, when somebody comes in, is I price them out with, you know, 15, 16 of our residential lenders. And I can tell you that your bank, Stearns Lending, has been, if not the top 3 in all of our pricing. And what I like about Stearns, man, is that I have you as our point of contact. And anything that, and I'm not just saying that because you're here, you're, you know, one of the best account executives that I've come across. Anytime that I have a question or a scenario or something's not going right with our file, I know I can call you and you come up with a solution. And there's been times, man, that you tell me, listen, Stearns can't do it. Take it to so-and-so bank, you know, and I appreciate that. So I know you've seen an uptick in business from us coming over to your pipeline. So looking forward to increasing that even more. And I appreciate all your help, man, in all these years. I appreciate your time here today. Maybe we can do this again in about 2 or 3 weeks' time. We can do another market update just to see how you're doing on your end with banking and applications and so forth. I think it's good insight.
Sounds good. Happy to be here.
Appreciate it, Rick. We'll talk soon, man. See ya.
Take care, man.